Cryptocurrency is a digital or virtual currency that uses cryptography for security and operates independently of a central bank. The most well-known cryptocurrency is Bitcoin, but there are thousands of other cryptocurrencies available, each with their own unique features and properties. Cryptocurrencies are decentralized, meaning they are not controlled by any government or financial institution. Transactions are recorded on a public ledger called a blockchain, which is distributed across a network of computers. This means that there is no single point of failure or vulnerability, and transactions are resistant to censorship and fraud. Cryptocurrencies can be used for a variety of purposes, including buying and selling goods and services, investing, and trading. They can be stored in digital wallets, which can be accessed from anywhere in the world, as long as there is an internet connection. While cryptocurrencies offer many advantages, they also come with some risks. One of the biggest risks is volatility, as cryptocurrency prices can fluctuate rapidly and unpredictably. This can make them a risky investment, especially for those who are not familiar with the market. There have also been concerns about the security of cryptocurrency exchanges, which have been the target of numerous high-profile hacks and thefts in recent years. Additionally, because cryptocurrencies are decentralized and largely unregulated, they can be used for illegal activities such as money laundering and terrorism financing. Despite these risks, cryptocurrencies are growing in popularity and adoption around the world. As more people and businesses begin to use and accept cryptocurrencies, they have the potential to transform the way we think about money and financial transactions.